Ladies and gentlemen, yesterday it seems like there might be some good news that Iran might be opening up the Straits of Hormuz under a toll-based system to let cargo ships and tankers go through. But however, someone called me and just said, Mr. Lu, the worst is not over. You ain't seen nothing yet. And there are reasons why. So under the consultation with a oil expert, I understand now what the problem is. Let me share with you why the worst may not be over. So yesterday I was quite happy. There's a possibility that we are going to have the Straits of Hormuz being cleared, but unfortunately, I think we are all celebrating too early. The stock market for sure is celebrating too early. But there is one thing that was very clear. The oil prices remain very high and in fact gone higher. So there is a disconnect between the oil market and the stock market. So in short, are we celebrating too early? Let me just share with you what I've gotten as an insight from some expert. So this is what I call the toll road illusion. And precisely, it simply means that while reopening the Straits of Hormuz itself might not stop an oil shock and possibly a recession or a stagflation. Remember to hit subscribe because we are bringing you news and analysis on the real-time basis. Things are changing by the day, by half a day, by the hour. So remember, hit subscribe and so that you will not miss any of this important news. Now, it is very possible that the Straits of Hormuz can now reopen under a framework of a toll-based system. We don't know the detail yet. There are early signs that that could happen, but the oil shock remains. So opening the Straits of Hormuz, let's assume that you open, it's not even confirmed that you open, doesn't mean the crisis is over, fundamentally because of one big reason. The Gulf countries' oil and gas infrastructure, they are all badly damaged and they do not have the ability to restore it right now under a war situation. So the supply capacity is structurally reduced significantly, and this could last for a very long time. In short, the oil shortage could lead to a much higher price shock, and that could spill over to the rest of the world as inflation. Well, this is a classic case of a supply shock or an oil shock. Well, we know and experience the entire blockade by Iran on the Straits of Hormuz, and that stopped a lot of oil flow and gas flow. So I call that phase one. Phase one is not over yet. We are still in it, but there are hopes that now a phase two, which is a toll-based approach, is possibly going to open up. Under a toll-based approach, most likely there will be control access. The Iranians are probably going to let quite a lot more tankers that goes through, but they're probably going to stop those that are going to allies of United States and Israel. But the rest of the countries generally to go through, they make money out of it. So I think they will try to let as many go through as possible. But it is more or less a restricted flow because they will have to check to make sure that they are not enemies of Iran. And more importantly, they actually pay the service charge and toll charges. Now, more importantly, right now, there is a phase three after that, which is after this batch of stuck ships goes through, the supply, the new supply out of the Gulf countries, we don't know how bad the situation is right now, but we know that they have been severely damaged. So therefore, the supply would have been disrupted by quite a lot. This is the largest Gulf country energy shock in history. This shock is bigger than that of the 1973 oil embargo. So this is a case where Qatar, UAE, Kuwait, Bahrain, Saudi Arabia, everyone has been hit in some way. And this is a regional supply impairment and disruption of a massive scale. Let's talk about Qatar. Qatar is one of the world's largest gas. Sorry, let's try this again. So let's talk about Qatar. Qatar is one of the world's largest LNG gas supplier, and they supply about 77 million tons per annum amount of LNG gas. That's about 20% of global supply. Now, their supply right now, according to what they released, 17% has been hit. And the recovery time for that 17% is easily 3 to 5 years. So this hit is really very bad, and many countries are going to suffer from this hit. So UAE, wow, poor thing. Non-stop being hit because it's the nearest to Iran. And the hits are so regular, almost every day they get hit. And right now we have got Habshan complex that's being hit as well. Their gas field is being hit. Their port is being hit. Their airport is being hit. Many infrastructures are being hit. We don't know how bad it is. Even fertilizer chain processing and so on, a lot of them were being hit. There are talks that it could be even more than 50% down because of this conflict. Kuwait and Bahrain, right now, their refineries are being hit as well. Kuwait recently was being hit quite badly. So, again, we are looking at damage capacity, and to repair some of this will take years. So, it is very clear that what Kuwait and Bahrain can supply to the world has gone down significantly as well. Saudi Arabia has some disruption. It looks like their hit is not the worst because they have a way to channel the oil to the other end of the straits through their east-west pipeline. So this actually provide the world with a badly needed way out. And right now, Iran possibly is targeting this redundancy as well. So if you hit the backup, then the backup got no more backup. So right now, the backstop is very vulnerable. So altogether, about 2 to 5 million barrels of oil capacity are hit and possibly will go offline for many months or years. And possibly 25% of the global LNG gas is being impacted. And this time around, the oil shock in scale is 3 times that of the 1973 oil shock. So this is a very big oil shock and a very big gas shock as well. While the world celebrates, especially in the stock market, that possibly Iran is going to open up the Straits of Hormuz to allow flow, but also need to take note this is now flow with friction. It's not an efficient sail through. So there will be inspection, there will be possibly some political gatekeeping to make sure some of the enemies are being going to be badly treated and some are going to be allowed to go through because they are friends. And as a result, wartime risk insurance for all this shipping will likely to go up. So cost is likely to go up as well, as much as time and all the regulations they have to clear through as well. So this one, I would say that it is going to be a flow, but it's going to be a friction filled flow. So it's not going to be that easy, and I think it's hard to say what will happen because the news full detail of the toll concept is not out yet. Well, we're trying to run some simulations, but if we are looking at maybe a 80% flow of pre-war conditions, okay, then the flow is about 15.5 million barrels per day. This would be a painful shock, but probably not a recessionary shock. But let's say we are hit with a 65% base case shock, meaning that compared to before the war and now, you can only produce up to 65% of what you used to be. And this 65% get delivered out. We are already looking at a very bad oil shock and possibly stagflation, which means inflation plus recession globally. If it's a 50% flow down, wow, then the stagflation will be very severe. Now let's talk about stagflation. Stagflation is an economic phenomena where there is inflation and there is decrease in GDP, national income, and activity. So when these two get hit, it's very bad because the monetary authorities like the Federal Reserve and Central Bank, they can't deal with this easily. Because if you increase the interest rate to fight the inflation, this will cause economic activity and GDP to be lowered. If you cut the interest rate to allow a stimulation of the national income and economic activity, the cut in interest rate will fuel the inflation higher. So they are caught between the devil and deep blue sea. All central bankers hate stagflation. So the worst outcome is a stagflation. And right now, we are possibly looking at one of these. So if this were to happen, then it will be a very major shock, not just to the economy, but also to the stock market. So right now, the base case is 65% flow. That means the oil flow is going to be 65% of what it used to be, at least for the initial phase. And this would bring the world into a near stagflation territory. But it's hard to say because we don't really know how much the hit was and is going to be, because the situation is still developing. The war is not over. They are still being hit. So we are looking at maybe around a 35% oil flow and gas flow cut. So this will be very bad, and this is what we think is the base case. Now, we didn't talk about food and fertilizer very much, but really, if there is going to be a hit on urea, ammonia, and some sulfur production, then this could possibly hit food production in many parts of the world, and this could have other flow-on effect. So this is something that most of the news channel don't talk about a lot, but this is a real problem. So really, at this juncture, the market is celebrating that possibly a Strait of Hormuz is likely to open, but I think we may be celebrating too early. The question we now need to ask is how much energy capacity has been permanently or temporarily hit that will take a long time to recover. And if the answer is a lot of it has been hit, then I think the reality will step in, oil prices will go up very high, and we will have a serious problem. And by the way, the war is still going on in a massive way. So the Iranians, as we speak today, as we ended the live stream yesterday, announcing the good news that there may be a toll booth to be set up to allow tankers to go through, the Iranians have just hit two countries' energy facility. So UAE has just been hit, Kuwait has just been hit, and right now it's a serious problem. So the Habshan gas facilities has been hit just today. Critical infrastructure has been hit. The debris from intercepted Iranian missiles ignited fire at the Habshan gas refinery complex, one of the world's largest one. And this one is the second incident, not the first incident. So right now, operation has been suspended and energy cannot be produced anymore. The emergency response has been activated. So this has just happened today. So while we are saying that, whoa, good news is coming, war is still going on, energy infrastructure is still being crippled. And right now in Kuwait, wow, this morning, power and desalination plants are being targeted. So the Iranian drones and missiles struck critical power and desalination, water desalination facilities. Now, there is currently no casualties or not much has been said about it, but clearly we are just looking at one day. As long as this war don't end, I think Iran will continue to hit the Gulf countries. Today, the United States have just hit and destroyed part of the longest bridge in Iran. And this will surely invite retaliation from the Iranians towards the Gulf countries. So we don't know how bad it will be. And I think this tit for tat will go on until Donald Trump start to withdraw from this war. So the bottom line is the worst may not be over, and having the opening of the Straits of Hormuz under a toll-based system, well, that's a good news, but I think all of us are forgetting that the whole war is not over. Infrastructure has already been hit and damaged to a large extent, and the war is still going on, and more infrastructure continue to be damaged. So it is really a very bad situation. Until the war is over, we cannot access much of this degree of damages. So I think it's very difficult to predict what lies ahead. So remember to hit subscribe as I try to provide you with the latest and important update from a financial and economic perspective. We shall see this situation unfold day by day, hour by hour. Thank you for watching, and I'll see you possibly tonight for a live stream.